What's going on, traders? It's Lucas here from the Commitment of Traders Club. Thank you so much for joining me today on the second day in a row that we have posted on our YouTube channel. I wanted to make a brief video today advising you a little bit about myself, my trading career, my trading journey, and the benefits that I have learned over the past few years of trading and the mistakes and pitfalls that I've fallen into so that you guys can avoid them sooner rather than later. So, different one today. I'm not going to be analysing the chart too much. You'll get some more of that later on in the week. But about myself, I am of course a retail trader. I don't work for a big institution, although my trading philosophy is follow what the institutions are doing. The reason being, if we look over on the chart, we can see that they are the ones who make the market move. Retail traders have a very limited impact on price movement and price action. But it is the institutional traders who have the big buying and selling pressure in the market. So my retail journey started off much like yours probably has, and that is looking at YouTube videos, seeing to learn the basics, learn the candlestick formations, the candlestick patterns, and then also the crux of the issue is finding the golden secret to Forex trading. I sat there for hours and hours and hours looking through YouTube, finding the perfect trading indicator to make my life easier as a Forex trader. Now, leave a like on this video if you are also scouting through this channel looking for the golden indicator that makes you the most money. I'll click that like button myself. I'm guilty of that, and I expect everyone who's watching this is also guilty of that. So, the pitfall that you need to understand first and foremost is, number one, you cannot make quick money in Forex trading. The only thing you can do quickly is blow your account, and trust me, it hurts a lot. You will see plenty of YouTubers out there on YouTube telling you about how you can make 10,000 in a weekend, or you can make 500 pips a day, or 100 pips a day even. And by all means, that is possible. You can make 100 pips a day. But that depends on if the market is making those moves a day. Back over onto my chart, you can see my watch list down the side of how many pairs I have on the go at one time. I don't clutter my watch list with too many. I like to keep on top of things and understand the pairs and what they do and how they behave. Now, some pairs will make me 100 pips a day, others will not. So don't fall for the pitfall that it is a get-rich-quick scheme. Forex trading is like a business, and if you treat it like a business, you'll make money like a businessman. That is how I see it. If you start off with a small account, which I highly recommend, I started mine off with £100, and mine has grown dramatically since then. I've put more of my own money in, and I've also reinvested my profits I've made to now is a significant size. But if you are willing to lose that £100, play it smart, play it safe, and keep things simple. It's very easy to go and put 100% of your account size on there because you want to make 1 to 3, you want to triple your account size immediately. But then if you're wrong on that occasion, and as I say, you can be wrong 7 times out of 10 and you'll still be profitable. All it takes is that one time if you're using your whole account size, and you're out of the game, you're gone. So traders, play it smart, use a sophisticated amount of leverage, a sophisticated account size, and don't do anything silly that you're not willing to lose, that you accept the loss, accept the risk. So my point here is, when I first started as a retail trader, I was looking at these YouTubers who are of similar age to you and I, out there with their fancy cars and their quick, big, get rich quick schemes, and I fell for that pitfall, and I would invest more than I was happy to lose, and I would lose it. So then I'd be pumping more of my own capital into my trading account and quickly losing that as well. So then I gave up that idea. Most of it will be, scalping. You need to understand quickly if you're a scalper, if you're a swing trader like myself, or if you're a day trader. Each of those trading types has a benefit, and each of them has drawbacks. As a retail trader myself, I like to get on with my day, do what I have planned, and let my account build itself up. If you're a scalper, you've got to sit there all day long in front of the chart, waiting for that right moment for your trading plan to be triggered and to enter into that 5-minute chart or whatever chart you're trading, 30-minute even, and get in there quickly. There's not much room for error. Whereas if you're a swing trader like myself, you've got time to sit back, look at the 4-hour chart, and really understand the market before you hit that execute button. So once you've got down, if you're a swing trader, a scalper, or a day trader, a pitfall that you do not want to fall into is relying on the indicators. It goes back to what I was saying at the beginning of this video. Do not rely on the indicators. If we head back over to the chart, I'll pop on some indicators that I have been using in the past. I don't use them so much anymore. It's the 50 and the 200 EMA. And I know traders, you've been asking for it, so I will do a video on moving averages and other indicators which are useful. But I like to push my own strategy out there, which is to keep things simple. Now, the issue with a moving average, it works very well if you're back testing. You know, some would say sell when you're below the 50 EMA, buy when you're above the 50 EMA, or vice versa with the 200. And at this point here, that works very well. You can clearly see that price has tapped off it. You'd enter that sell position and you've made some quick money. But what they don't tell you when you're watching these videos is it's actually a lagging indicator. You can see that we're far, far away from the current indication level, and price will actually move and this indicator will lag towards it. So it's not a very accurate indicator if you want to rely on it to be the sole reason you enter into a trade. Use indicators sparingly. Do not clutter your chart full of them. Keep them clean and use them as an additional confluence to your own idea. That brings me on to another point, and that is be original. You can easily go onto TradingView, YouTube, and find out what Joe, Dick and Harry have their ideas on if Euro USD is going to go up or down. They may be right, they may be wrong. But in doing that and relying on the opinions of other people, you're not making that decision for yourself, and therefore you're not learning. And if you're not learning, you're not understanding how the chart moves. So as a retail trader, we often like to get the opinion of other people before we enter that trade. And in doing so, we're putting all the responsibility and the reliance on that person's own analysis, which could be great. It may work 100% for them or 80% for them, but it may not work for you at all. So use your own analysis, be smart with your money, and then come up with your own ideas as to your trades. Now, back to myself a little bit. We're bouncing about on this video, apologies. It's an ad hoc video today. About myself, I blew my account very quickly early on in the process, and it took me a good few years to actually understand what the market is telling me and why the market is doing the exact opposite of what I want it to do. I'm not the only retail trader out there that's had this, and maybe most of you are still having this problem. You put on a trade, you've checked all the indicators out there, you're looking at Euro GBP like we are on this chart, for example, and you've gone, you know what, all my eggs are in this basket, this is definitely a buy trade. All my confluences have added up, I'm going for that buy. Hit the buy, 3 hours later, you're stopped out. The market has gone in the wrong direction again. What's going on? Why is it doing that? Why am I getting stopped out? Maybe I think the market's going to go up, so I'm just going to put a sell order because I'm always wrong. And it got to that stage for me, I thought, what am I doing wrong that every time I'm putting a trade on, I lose it? Every time. And it can be very frustrating and you feel like giving up. And I'm not the only person out there that will tell you that. My point being is, it happens to everyone, and I have the solution for you. There's two things that you need to do. Number one is patience. Be patient. The market may go in your direction, but it may not be the right time for it currently to go in your direction. We all know that I like to use the Fibonacci, and I like to trade from the 0.618 zone. If price hasn't tapped it yet, I'm not going to do anything. I'm going to wait patiently. I know that price likes to respect that level, so I'm going to wait patiently for it. Had I not used this in the past, I'd have been, price is going to go down, let's sell it. And then it would go up to that Fibonacci level that I wasn't sure about, didn't even know about it, and then it would go in my direction. But by that point, I've already lost. And that brings me on to my second point, and the reason why retail traders are failing is they're not following the smart money. I cannot make that clearer, that you need to follow the smart money. If the banks are lining up to sell You do not want to be entering into a buy position because they are ready to make that market plummet. If we go back onto the chart, this huge reversal up here, it doesn't happen by magic. It doesn't happen because the chart gets bored of going up and wants to go back down. It happens because the institutions and the banks and the big players in this game want it to do that, and they're profiting from it. Let that sink in. So you would have bought at this area, we'll wait for the pullback. Look at that, it's come nicely back to our zone, retested. Let's enter a buy position, and then the market plummets. How do we know that the market is going to do this? That brings me on to why I created the Commitment of Traders Club. I soon realised after trading wrongly for so many years, finally unlocking the power of the Commitment of Traders reports, that they are the most important thing you need to be looking at when you're trading. My trading account has grown exponentially after unlocking the secret of the Commitment of Traders reports. If you know what the banks are doing, if you know that they're lining up a sell position, all you've got to do is wait patiently for that chart to tell you that they're ready to do it, and then enter, and you will be right. I would say 85 to 90% of my trades are now correct. I'm on the right side of the market because of patience and understanding what the banks are doing. If you are new here, please head over to my website, which I will link in the comments below. Join our club. It is not as expensive as any of the trading clubs out there and provides you the most important benefit, where the banks are putting their money. You'll see for £30 a month or $45, depending on the plan you go for, you'll get access to the current and historic Commitment of Traders reports data. Now, of course, you can look at them online. They are available. But the pitfalls there is they only show you the current week. You don't get the bigger picture. And banks don't just change their position from one night to the other. They build them up over a set amount of weeks. So if we go on to the Commitment of Traders reports, let's go on pound, for example. And we can see from this area here to the 27th of July, they've been building up that sell position to enter the sell, and now they're rebuilding it up to the buy position. So you can see by looking at the charts what the banks and institutions are publishing, where the market is going to move. And they do that by building them up over a certain amount of weeks. By looking at this data and understanding what the data is telling you, which our website will educate you on, you can revolutionize your trading plan and your trading strategy to make your trading style not reliant on indicators like mine was. Don't rely on the EMA. Don't rely on divergences. Don't rely on stochastic indicators on their own. Rely on technical analysis and rely on where the banks are moving the money. I'll leave you with this. Understand why on every broker you click on, they tell you that 73, 84, 78% of retail traders lose their money with this provider. Now, that's not a negative thing about that particular broker. That's just the reality. The reality is most of you out there will lose money. Luckily, I'm not part of those losers anymore. I am a winner in this game because I understood the game, albeit at a very late stage. Traders, I want you to understand the game at the earliest possible opportunity so you can be a part of the winners and leave the losers in the distance. I hope you've learned something. I hope you've learned something about myself and my journey through this game. It's by no means an easy game, but we're all here to make some juicy money. And baby, when the money comes in, we're all happy. Hit the like button for me, guys. Help my channel grow and get more retail traders out there aware of us. And if you're not part of the club, click the link below, click our Instagram below, join a fantastic community of retail traders, and we'll see you on the winning side of the market. In the meantime, I wish you the best of trading weeks ahead, and I'll see you guys on the next one. Let's go.